Hi everyone, hope you're all doing well. First of all, apologies, there was no video yesterday. It's just one of those days where work was really busy and I had no time to record a video. Even tonight has been a bit of a struggle to get a video in time, but I'll try my best for you guys and I'll try and make up for it and do a video on Sunday for you guys for the video that we missed yesterday. Today, I'll try and cover all the stuff that's happened in the last 2 days since I've not made a video. So we've had the inflation data. Celsius has gone on a little bit of a rally. InMode have brought out some results or preliminary results. I'm going to talk about a stock that I think is very cheap at the moment. And there's something else, but I've totally forgotten what it is. So I'll see what that is when I get to it. Hope you enjoyed the video, guys. Let's get started. So today, the market is down slightly. It was down a little bit more before I started putting this video together. Bit of a recovery going on at the moment, but still not a great day out there. I think everything's been halted since the inflation data came out. The inflation data came out and it was good. Still moving in the right direction, as you can see here, but the only problem is that we were expecting 2.3 and it actually came in at 2.4. So a little bit disappointing there. Nothing too major, you know. Sometimes the market can get a little bit overexcited or worried about a 0.1 miss either side. It's nothing too major. We're all moving in the right direction. 2.4 is still a good amount. I think everybody just wanted that certainty that the Fed would continue to cut, and maybe a 2.4 maybe goes, maybe we slow down a little bit. I don't know. Maybe they're just a little bit cautious coming up there. I think if the rally was to continue, they would want to see that 2.3 come in, but it is what it is. We've talked a lot about inflation data over the last 2 years, so I'm going to keep it nice and brief. Pepsi came out with the numbers, and once again, another stock with some pretty poor earnings. The EPS did come in with a 0.02 beat, but that cannot obviously be just through inventory and analyst targets moving down. There was a net revenue miss though of 0.46, and I hate how they do these numbers here on Seeking Alpha now. I really prefer like the old numbers when they used to do their old numbers. But just to put it like into a bit more context of like what those numbers were, you can see here revenue was actually a decline of 0.6%, which is obviously something that you never want to see when a company reports those kind of numbers. But the key part was there was a bit of Celsius talk. So a question came on the conference call about Celsius and how the partnership is going, and he said that on the conference call they said, we are delivering on our part of the partnership. Our distribution points are going up, which is great. Pepsi are only going to improve something or send more distribution points out if the product is doing well. Our service levels keep going up, so we are executing our part of the partnership with discipline and high standards, and we remain optimistic on the partnership. So all very good from there. What also came out is that there was a analyst which was Stifler pointed to once again improvement in the space of Celsius. So positive analyst data that kind of came out. And then another bit of information came out was there was the new Talking Teen survey that came out by Piper Sandler. A lot of good information about there about what brands are popular, what's up and coming. I'm sure the guys on the Playing Footsie podcast are going to cover it a lot more detail this weekend. So I'll keep it nice and brief, not to take one of their segments of their shows. But there was a bit of talk about Celsius and obviously energy drinks, and energy drinks in teens are still the preferred drinks at 39% over coffee at 31% and soda at 30%. So obviously energy market is still very popular with teens. I think a lot of people don't realise this, especially the older generation, and maybe not to offend anyone here, but the older generation of investors don't realise that teens prefer energy drinks over coffee. Like energy drinks is the new coffee. So as these generations keep coming through and the current generations get older, if that maintains the same, you're going to have a bigger audience using energy drinks as they do get older, if that does stay the same. But all this positive news has sent Celsius up a very decent amount since Tuesday. As you can see here, the stock is up around 19%. So seems like there's a few bottom pickers coming into Celsius at the moment about it, and buying up the dip slightly. The reason why is probably that there's finally a bit of positive data. Everybody's waiting for the positive data to kind of like justify buying the dip, I guess. But I've always said, like, the thing with Celsius is that we know it's a popular drink. Like, we only have to look at the Amazon market share, that when Pepsi get Celsius these more distribution points, Celsius is going to be the number 2 energy drink probably in the US behind Monster. So it just needs to get these service points up. And as that happens and the inventory issue is solved, Celsius is still a good business. I've been very surprised to see the amount of negativity out there on Celsius. And I've seen it on X as well a few times. Like the negativity towards this stock, like it's a stock that's struggling. And yeah, you could argue, yeah, the financials have not been great. But when you look into why that is, and you actually start looking at the proper data, like when you look at data at checkout and looking at the scans still, when you look past the inventory issue, the company's still selling very well. Energy drink sector is still doing very well, even though there's a couple of tougher comps in there at the moment. It's still doing very well, and the Celsius story is still very good for the future. The big thing that you need to put into context with Celsius is Celsius going to grow, let's say, 10% going forward? Or is it going to grow 20% going forward? That's the only big issue with Celsius. Like, I think a few people are talking about Celsius at the moment, like, is Celsius going to go bankrupt? Is it a fad? And that's not the case with Celsius. And that's what it seems to be getting priced at a little bit at the moment. And when we start looking at Celsius, it's gone up a little bit now, but I think the stock fell to like 28% or something. And you're getting to the likes of Coca-Cola at 25 times earnings, Pepsi at 25 times earnings, Monster at 31 times earnings. It was getting valued the same as these other beverage companies, but Celsius is so, like, it's about 3 years in its growth stage. This company is growing at 20% when you've got Coca-Cola that's just done negative growth. Pepsi that's just done negative growth. Coca-Cola isn't much better, I believe. Yeah, it's up 3%, and Monster's growing at 2%? Yeah, 2%. And Celsius just came off a quarter where it grew 23%. Now, there's going to be a couple of fluctuations in the industry, and that's what we've got to work out for is, what is it actually growing at? Is it a 10%? Is it a 20%? That's what we're trying to work out. But the fact that it was getting to the point where it was priced that low, yeah, that was a little bit crazy. And now there's like a few buyers coming in and bottom dipping this, and with the positive news, that's probably the catalyst to send it up a little bit. I've got to say, with the amount that it has gone up, does make me a little bit suspicious that Pepsi have just come off their earnings. They talk very positively about it. Is there big money coming into this? Is this why the stock's starting to rally up so much? I've got to say, if you are Pepsi, and you've got all this data about how it's selling and if it's going really well, and you're willing to increase these sell points, and you've already taken a stake in the business, I think if anything right now you've got to be looking and thinking, you know what, we could buy our stake in Celsius, the same levels that we could have got it back in the likes of, I don't know, when was it, these sort of prices last time, somewhere around November 2021. So you're getting nearly 3 years of share price appreciation wiped out on this. The stock was all the way up at a 20 plus billion market valuation at the start of the year. If you're thinking right now, when's our best, if we want to own this, if we want a key, Pepsi don't have Monster, Coca-Cola has Monster. If we want a key energy business right now and we want to buy it, they own a stake in it, but if we want a bigger stake in it, if we want to take it over, when is your best time to go for that? And, an 8 billion valuation, I mean, if you start throwing I don't know, I think you still have to go quite a fair amount. I think if you threw I was going to say 16 billion, but even then I don't think it's enough. I think you might even have to go a bit higher, maybe 18 billion. If you start throwing an 18 billion offer to Celsius at these levels, I think Celsius would maybe have a little bit of a think on it. And for Pepsi, would 18 billion be a pretty decent offer, considering when you look at Monster, and Monster is a 49 billion market cap? Is that enough room for Pepsi to kind of, can they double that value up in the next kind of 5 years? I think so. Is that a good offer for Celsius and Pepsi where they both walk away happy? I think if they're going to do it, now is the time anyway. So the only little thing I am going to say, there was some negative news out the other day that, I say news out the other day. Matty posted on Discord. I've not asked him if I can use this photo, but I assume it's okay to use it, Matty. I apologise. He posted a photo on this Discord, and he was saying like, I've been really critical around the UK launch. I still think Celsius will do very well in the US and Canada. It's the UK and international expansion, because if international expansion is successful, they could be a 50 billion market cap company like Monster if they are successful internationally. We'll see if it gets there. But we've seen them launch in the UK, and one big thing that I've been very critical of is that they have not done good marketing. Now, Matty was actually walking around and he actually saw Celsius doing some marketing the other day, not in the UK, in Ireland. Obviously, both countries they expanded into, roughly the same time, same sort of audience really, across the pond from the US. And this was their marketing, and I've got to say, I was critical about the marketing before. I didn't think it could get worse, but I've got to say, I think it might have got a little bit worse with this photo. I mean, these people, I don't want to be, critical of people, but, fair enough, they got some, coats on here. I'm not sure what's going on with that haircut down there. It's going to be a bit windy up there. But, I mean, I don't know if this person here is working at Celsius. She's getting some out of the can. But if she's working here, I mean, I don't even think that's a Celsius hoodie on there. I mean, you'd think that, the people that would be working for Celsius would, like I say, I don't know if she might have just gone and they might say, yeah, go get one out of the box. And they go get one out of the box. And she might be just getting one out of the box. But if she's working for Celsius and she's dressed like that, I'm a little bit concerned. I want to see them, at least in these, coats that these people have got on. And what I'll say, I don't know if you guys can see, I'm going to try to zoom in. Like these boxes, the hand, I mean, look at this. They look absolutely knackered. They look like they've actually pulled them out of the skip or something. Like, if this is their marketing tools that they're using, this isn't going to be, really attractive for people, are they? Like, they're all scratched on wheels. And, the days where Monster was doing their advertising, they had, big monster trucks. I mean, this looks a little bit crap, really, to be honest with you. Yeah, not good at all. And I just think, yeah, it could be done a little bit better than this. This doesn't look, like a premium energy drink brand to me, to be fair. So, yeah, maybe no advertising is better than that advertising anyway. So, yeah, that's where we're at with Celsius. Some positives, well, a lot more positive in the last few days, but also a little bit of negative in there. InMode up 6% today. Maybe the share buybacks are coming in at last. It's been a tough time for InMode at the moment, all the way down at 9 times earnings, 1.2 billion market cap. They came out and they did cut their financial year revenue guidance. However, they did provide a Q3 guidance that was higher than expected. So they said they expected their Q3 revenue to come into 130 million. And if you look at analyst targets for Q3, they were 118 million. So a really nice beat on the Q3. We've not seen InMode beat for a while, which was really good. However, they did say that it was because of some contracts and pre-orders they had for the new machines. That's why the last quarter was so weak. So kind of balances out the last really bad quarter to have a good Q3. The big thing was the full year guidance. They did downgrade that slightly to about 115 million. That was from their previous guidance of about 126 million. So around about 11 million downgrade on the guidance. But the only thing I wasn't really happy with is that I did some quick maths and I looked at the Q1 earning revenue, which was 106 million, Q2 revenue, which was 86 million, and that puts us on the current revenue as well from the Q3, 296 million. So with some quick maths there, we're somewhere around about 119 million for Q4. So if we look at Q4's estimates at the moment, that is below what the average estimate was for Q4. We were expected to go back to growth in Q4, but obviously that's not going to be growth on last year's numbers. So yeah, I was kind of like, oh, we've had a beat. Are we kind of at the bottom here? And then I looked at the guidance. I'm like, oh, but the guidance is still weak. And I think if I want to buy, I've got to start seeing it moving in the right direction. And it's still, even though the Q3 was a nice beat, it's still not moving in the right direction for the next quarter. And that's what I want to see. I want to see if they can get back to, these growth levels. Because, like I said before, if InMode can get back to the old growth levels, at this sort of valuation for InMode, it only has to do a small amount of growth and the stock will fly. It's just if it can get there, and that's what I'm kind of waiting for. So good signs here, and a few people maybe jumping into the stock and maybe the share buybacks kicking in and buying the stock. But I still am a little bit nervous about the longer term outlook. I want to see it a little bit more positive before I do go buy it, but we'll see what happens there. The stock that I forgot about at the start of the video, SoFi. On a bit of a rally at the moment. There's a lot of fintechs actually doing quite well, up 23% in the last month, so really good. Although, what surprised me is year to date it's still down 9%, which is surprising to see. But when you look at the volatility of SoFi, whoa, look at some of these moves here. You're talking about 20-30% swings all over the place. I guess that's key. I always said SoFi for me, you know, you want to buy under $7, and I guess that's why it's key to be sometimes on a stock like this, you know, you got to have the right time to buy it, and you got to have your discipline of like, where am I happy to buy, and you probably will get it. The other last video I talked about was like HIMS, and I was talking about, you know, there's a lot of volatility going on in HIMS, and I'm happy to hold my shares in long term, but with this volatility, you can easily make some money here. You know, there's times where it swings down 39%, but there's times where it can, you know, swing up 40%. And as a long-term investor, I'm holding for the long term. But when you got volatility like this, and if you've got nice averages and you're patient and you're buying at the right times, you can even make some money on the short term, even if you're a long-term investor. And that's why, you know, I took a little bit of profit off the table. And since I did take a little bit of profit off the table, the stock's actually fallen another 10% since that time frame. So yeah. Last one, Evolution. I talked about UK dividend stocks a little bit weak at the moment, and there's a lot of opportunities out there, but this one, whoa, this one is coming an opportunity and a half, I think, in my opinion, right now. The stock's down 20% year to date. The stock now trades at 16 times earnings with a 3.2% dividend yield. But when you look at financials, this is where the stock price has disconnected to the financials. Look at the revenue growth. Even this year, we're going to go from 1 billion. I'm sure these numbers are in billions. Let me just double check that. Yeah, there must be. I think they're in billions. 1.7 billion to 1.9 billion in 1.7 billion to 2.08 billion, and next year they're going to go from 2.08 up to 2.404. Very, very good growth. Very good growth. You know, nearly 20% growth. You look at the net profit, all the net profit moving in the right direction as well. And the company's going to go from 16 times earnings down to 13 times earnings. You know, you shouldn't be getting a company that's growing nearly 20% below market average valuations. Never mind 13 times forward earnings. Like, this is a premium company. Like, you would normally say that this should be a company trading like 25, 30 times earnings. And the stock is below market average valuations. And in fact, year to date, it's down. This is where a stock is disconnected from its financials. And I was already thinking like the stock is pretty cheap at the moment. But within like the last, you know, since August, the stock's fallen like another 8%. And I'm just thinking, I know it's obviously an iGaming company and we need more states to come online to be successful. But at what point do you just think, this is just crazy? Like, I don't know. I looked at my portfolio the other day and I saw that this had another drop, and I thought, this is, you know, when you people ask me all the time about, you know, what are kind of like standout opportunities out there in the market, and it all depends at the time, you know, what certain stock prices are and the financials have recently posted. But this is one of those ones that looks to me like I just don't know how it's there. Like, it doesn't make sense how it's there. Like, I look at Stockopedia and the fact that in about 12 months time, well, not 12 months time, let's call it 14 months time. In 14 months time, we're going to be talking about a growth company that's growing nearly 20% at 13 times earnings. That's an opportunity and a half, guys. I'll give you a little hint there what I'm looking to buy, but hopefully you take it. And yeah, that's certainly one that looks really attractive. I mean, we talk about some of the UK stocks looking attractive. That looks attractive as well. So yeah, looks an opportunity. Anyway, that's enough for today, guys. A lot of stock talk going on there. Tomorrow, I'm going to try to do the video that I've been trying to do for a while, but there's been a lot of work going into it, and I think I finally got it together. And like I said, I'll try to do another video on Sunday for you guys to make up for the video that I missed on Wednesday or yesterday as well. So yeah, thanks for watching, guys, and I'll see you in a bit.